Hey, it's Mack with PriceActionTradingSystem.com, and this is Tuesday. It's May the 13th. This will be our chart lesson for today, and it's really been a tight uh, trading range today. For the most part, we've stayed between the 1893 to 1896.50 area. That's what I'm calling the range basically for now. There was really earlier on there was still an upward bias to this thing, and that was just left over from the you know the upward trend from yesterday. And you can see the EMA is still kind of working upwards, even though it's starting to flatten out. And then we broke higher, we came down, and now we've been stuck in the lower half of this range since. I mean, the move has pretty much been over since 1040, 1045 area right in here. And I mean, there was a long here. That was the last trade I marked, and then maybe a short right here. But even here, I don't know if I'd have taken that short or not. Um, and if you draw, you can get a little trend line here, kind of off these lows with the break and a new high, and now one working down. But it's just too rangy. I mean, you can see we're swinging. We really were kind of hung between the EMA and the low, and it looked like we were going to break higher here, but then we started working lower again. So, but notice that we do have this channel coming down, and we've gotten the break, and we've never gotten a new low. So, but generally by the time they've tested it this many times and can't get through, you'll work higher. So we could go higher from here before the afternoon's over. It wouldn't surprise me to see us back testing the upper side of this trend channel. But if we don't get through there pretty quickly, it wouldn't surprise me either if we don't go lower from here. So we will see. These are, we're making, we're breaking new ground in these areas here, these price ranges, making new highs. So it's not going to, prices aren't just going to run through these areas. So especially anytime you hit the century areas, and when I say that, I'm talking about the 1700, 1800, 1900, 2000 areas. Those are always going to be more difficult to get through. So just keep that in mind. But early on, I saw a little channel working up. You got the break, two legs up, and then we had moving down. And by that time, it was pretty obvious that we kind of were looking at a range. But I saw a channel here, and this is what I was looking at earlier. I was trading this channel. We got the break, and we've never made a new high yet. So, and we may not, because the channel may take, it may be too strong for us to get back up this high. But I got to looking at it, just played around with it a little more, and it could be that there's the new low. It could be that we kind of had a channel somewhat like this. I'm trying to remember exactly how I drew it. I think I drew it like this. Looking at this area as an overshoot here, and then you kind of drag that down right in there. And so there may be a channel kind of working there. Maybe it's maybe it's even a little lower like so. Um, but it tends to fit the best, kind of working up there off that lowest point there and those neck swings, and then you kind of get the equal overshoot. So it wouldn't surprise me if it's not more like that. It kind of makes more sense because you do get the break here, move to a new high. But it doesn't matter. You get to the same place no matter how you're looking at it. And I do believe this holds prices the best right here. So that's why I went with this. Even though we did get the break and we don't really have a new high, at least not yet. It wouldn't surprise me if we don't still work back up towards that high because we've tested this so many times and haven't gotten through. But let's talk about the trades. If you were here by 7 o'clock, the first one I saw here, notice the little channel working up the break, two legs up to a new high, and then a reversal bar. Um, that's a second entry short, counting this new low right here. First entry, pullback, second entry. So it's a second entry low, short counting from that end. It's a failed second entry long. Notice the high there, first entry, pullback, second entry. And you definitely don't want to go long right there, that close to a double top. Not after a trend line break, and not after it looks so choppy looking anyway up through there. Uh, there's plenty of room to get out here. If you could get in with a limit order, that's the way you want to do it. if you couldn't make this first bar for whatever reason you didn't get in there, let me get this out of the way. Then when this bar, look how bearish that is. It came back and tested the high again, then turned down. You could even go short right there for the most part. That was a quick, easy move. And then we bounced right down here. That was the highs from yesterday. We came back and tested those highs. We bounced a couple times, but then when we tested it a second time, notice the little double bottom here. Even though that went lower, that's still a double bottom. And at that point, I would have had those right, my line right there across all those. It's a broader double bottom really from these two lows. And so we tested it again, and I think it's too risky to go long right there. Even though you do have a break and a new low, you're better off to wait. And then it comes back and tests it again and then breaks higher. I like this one. You could have used a stop here, but because this is a doji and not a really good reversal type bar, you might have considered using a limit order here, and if you could get it filled. But even with a stop, you got just enough to get out, and then it turns down again, and then it bounces once. It tries it one more time, and then it turns up again. So I like going long right there. There's a second entry long off that new high. Pull back, first entry, pull back, second entry. And look how many times now we've tested this across here and couldn't get through. That's a good sign. Look how flat the EMA is. We're swinging back and forth. And of course it takes off back to the highs. Too close to the highs to get long here in my opinion, so I don't like this one. It breaks higher. I meant to make this one green because that's a first entry short. But with prices being this rangy looking and all within this first big move so far, when this broke higher just by a tad, that far away from the EMA, aggressive guys, two legs up, one leg, pull back, second leg. Aggressive guy's probably going to take that. You might use a limit order just to be safe, but it worked either way. But if you didn't take that one, when it tried to go higher and it tested those highs again and turned back down, that's really a second entry short right there. If you went to a smaller chart, you would see the move higher and then the break lower, the two legs. And you figure you're probably coming all the way to the lows, but you get more than enough for your scalp, but you don't quite make it to the lows. And so then that tells you you're making higher highs and higher lows. So you got to be thinking that we're probably going to make another new high. We may struggle to get through here, but we're probably going to make a new high. And there's your first leg. And you're looking for a target of something like this, and you said we got a little bit further than that. So I did like that short right there on a second entry short. I didn't like going long here because you haven't got back down to the lower side. There's not really any evidence until you get a few bounces here that this is a trend line. There is a trend line here that's holding, and when it turns and goes back up, you're too close to the highs to go long. So wait for that new high, then it pulls back. Now let me tell you why I like this trade right here. You got a new swing low. It's lower than this swing, lower than that swing, so you can count this as a new low. You get your first move up, first entry short. Second move up, so your second entry short, and it quickly fails and turns higher. And I actually entered this with a stop, even though it's probably better with a limit order. But I really thought we were going to keep working higher here. I was surprised that it turned back down that strongly, but it did. And I was looking for a break and probably a retest. But regardless, this still worked fairly easily. You got more than, it wasn't like you only got using a stop. You still had room to spare, I guess is what I'm trying to say. With a stop is 96.75. And you can see we went to, you had to have 98 to get out, and we went all the way to 98.50. So you had a couple of ticks to spare in there. But looking back at this after the fact, now that, I probably was being a little riskier, but it did bounce. You got your first two swings that kind of give you this trend line, and that confirms it. So I like that to the upside. Plus, I was looking for a measured leg like this one. And you can see we actually got more than that. So I like that trade. Then we're working down. You get your first two swings, and you come back here, And this one I went back and forth about whether or not to make it green, but you figure we're coming to here, and there's no break of this trend line yet. Uh, we we had a couple of people that there was a similar type setup yesterday, and I actually got a couple of different questions about it. I'm going to put that up and show you the difference between this setup and the ones that happened yesterday. Notice that I'm entering this on a correction back to the EMA, back to the trend line. We shot right through the midline, and we're kind of coming back under it and then going down. So there's a little bit of difference, and again, I'll put that other chart up. So I like that that entry because you figure we're coming back to test these lows. And we got some lower closes there than we did there. That's a big move down. So you just need a little, we're overdue for a correction, especially on a range type day. But you probably did want to use a limit order here that should have gotten filled. It shot down real quick, but it worked its way back and then opened up and went on lower. And then I didn't really see any reason to go short from here because there's just too much support across there. And you don't want to go long without a really good setup. You might have thought about going long right here because it gets you in at the very low of the range, and it would have worked, but I just think it's too risky because we don't have a new low in, and notice it turns right back down, and it tries to make another new low, and it can't. And notice how the closes are higher than here, even though prices went back down and tested this, and plus you got this low, you tested it once, you tested it twice. That's usually going to send prices in the other direction. And there it goes. And so I liked entering there. And you might have even thought about entering here because that's a second entry long, counting off this new low here. First entry, pullback, second entry. But it's so close to that middle line right there. And we couldn't get through there twice. So I just didn't like that one. It would have worked. I think it would have worked. Let me just, before I go telling you that, let's just... If you entered on a stop, your entry was 94.50, and you see it would have been a 4-tick. You would have got 4 ticks, but not quite enough to get out. So, the only way you could do this was if you used a limit order and got at least a tick better. But you can see it didn't come back any further than that, so you wouldn't have got filled. And if you got filled right there on the high, that would have got you out. But that's too risky. It's just too close to that midline. It's held twice. Notice how this time we came through the midline and came back and got an entry. This time you're trying to enter on this side and you haven't been able to get through yet. So that's part of the difference. And then I didn't like anything here except maybe a short here, but again, it's too close to these lows. By this time, you probably would have moved this down, though. And you got a little more room, so maybe going short right there because you still don't have the low. But, I'll mark it in green. I'm not crazy about it, though. But I think an aggressive trader might have gone short because you probably trapped some longs right there. People are looking for this to go higher, and they just probably ran the stops again before they take it back up again. So they're good at that, and so just be aware of that. And so not a lot of entries today. Really, the best entries are longs off of the lows. And notice if you'd have taken any of these longs, you probably would have been okay here. And shorts off the highs. But you would have had a couple fail right here. But by that time, you can see the trend is kind of working higher. So, and the bias is really up today. So you got to keep that in mind. Because the bias is up, you're more likely to get through the highs and fail on the shorts. And if the bias was down, it'd be just the opposite. You'd be more likely to fail at the highs and get through at the lows. So always remember that, keep up with the bias and trade the bias because that'll put more of the percentages on your side by doing that. So, but that's what I saw. Let me show you this other chart. Let me find it. And I'm going to show you some of the differences between a similar setup yesterday and then one today. All right, I got a couple of different people ask me about this trade right here. And notice what happened here. You're working down, and what people were looking at was this was a failed second entry long. You got first entry, pull back, second entry. But look where the second entry is occurring. You do have this trend line. You got no break of it yet, so that's one concern. There's an upward bias yesterday. Uh, we really had an upward trend, and this was the correction, and then you started a new trend to the upside, and so you got to keep that in mind. But there's a midline in here, and if you looked at my chart, you would have seen that line. And so notice this double bottom right here. You're trading down into that double bottom, and you're going short right there at that support area, which is never a good idea. There's basically two legs down. There's really three legs. You got a high, you work down, you work up, you work down, you work up. So there's two legs in the first leg, and then there comes the second leg, and there's only one leg in it. So this is a two-legged move with two legs in the first leg and then another leg. So I hope that's clear, but the idea is to go short. You only sell at high points and you only buy at low points, except in very rare occasions. And you're just selling the lows of this. There's too much movement down, and you're right into that midline, which is kind of no man's land. And you haven't gotten through that yet. If you got through and came back and then turned down, maybe, because then it's like a breakout pullback short. So I hope that's clear why this setup is different than this setup. Because look here, we traded down. First we had a failed break higher, and then we had a huge sell-off that went right through the midpoint and then pulls back to the trend line. And so you actually get a correction, and you're not selling down here. Look what would have happened if you wait and sell down here. You get trapped the same way. So there's a little bit of difference here, and but if you don't have a skilled eye and you're not sure what to look for, this would look like the same thing there that they did right here, and people will be asking me, well, why was it okay that time and it's not okay this time? Well, that's the difference. So I hope that's clear, because that is a much different entry right here than this entry right here, because you're not going short on the correction. You are, but this is a real tight channel, and if you had the other line on here, you would see that channel is coming right down through there. And I think this is too steep. I think this is a little flatter off those closes, and then that would make this fit real well on this side on all the bounces. So but the big thing is there's a double bottom right here, and you're going short into that after a huge move down with two legs down. So it's time for a little bit of a correction, and of course we just went higher from there. This just turned out to be a second entry long, and there is a second entry long there, but look at your signal bar. That's another clue. Look at that signal bar right there. That's a bearish bar that closed on its very low, and then we broke above it. So I'm assuming that's what where he said I failed. Okay, they went short here, but that's not a very good setup. So I was actually thinking backwards there. I'm sorry. So there is a second entry long there. You definitely don't want to be going long right here, but you don't want to be going short either. So this is one you're just sitting tight, kind of in what I call no man's land, right in the middle, because this is where you get a lot of failures. And now if we'd have went straight on through and then pulled back and maybe went down with a good setup bar, those little matching lows, this is just a little trading range right here. And the reason is because it's hitting support. And it broke lower, it trapped people, and so instead of trapping people this way, they just fooled people into going short, and then they trapped them to the short side. So if you got tricked into going short, you just got outsmarted basically, because the price action is never wrong. We make mistakes, we misread it, but the price action is never wrong. So if it fails, there's a reason. You just have to figure it out, and the main reason is there's an upward bias. There's strong support across here, and there's already two legs down, and if you see all that, then you realize something's not quite right there. So now if this would have broke higher and then turned lower and went out the other side, maybe you consider it, But even then, I think you're going short after 2 legs down, and you're better off just to wait and see if it doesn't bounce a couple of more ticks lower at where the low of the range is. So hope that's clear, but these are definitely two different setups. Even though it looks very similar, this is much different setup. So it has some similarities, but it's a much different trade. So, but anyway, that's pretty much it for today. I'm going to wrap it up. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.